How much can you earn while on Social Security, Disability, or SSI in 2023? Many people receiving Social Security retirement benefits choose to continue working or return to work. Some enjoy the social aspect of work, while others have a financial need. However, working past your retirement can affect your monthly benefit from the Social Security Administration. So, just how much can you earn while receiving Social Security? The answer depends on whether or not you have reached full retirement age. Once you apply for Social Security retirement benefits, the Social Security Administration, SSA, considers you retired for their purposes. Working past retirement can affect your retirement benefits in a couple of different ways. First, it might reduce your monthly benefit amount. If you earn more than the Social Security earnings limit, your benefit will be reduced accordingly. The limit depends on your current age, and we will discuss the limits in more detail shortly. Even though your benefits are reduced when you work and earn more than the Social Security limit, you will receive credit for these reduced benefits upon reaching full retirement age. Your benefit amount will be recalculated to account for the amounts that Social Security has previously withheld. So, even though your benefits are lower while you continue to work, that reduction amount will not be lost forever. You should also know that only earned income counts toward the Social Security limit. In effect, only money earned at a job or self-employment profit counts toward the limit. The income from retirement accounts, annuities, IRAs, or other similar sources will not affect the amount of your retirement benefit. In addition to a reduction in benefits, working past retirement might also cause your Social Security benefits to become taxable. Whether or not you pay income tax on your Social Security benefits depends on your total income. When assessing the taxability of your benefits, all your income will be counted. Even income from retirement accounts or other unearned income will count toward the total. If your benefits are taxed, it will only affect 50 to 85% of them, depending on your income. So what is full retirement age? Most people wait until full retirement age to collect Social Security benefits, although you can start benefits early. Similarly, you can delay the start of your benefits past full retirement age to increase the amount of your benefit. If you wait until age 70 to receive Social Security, your benefits will be maxed out. Starting your benefits early will reduce them, while starting them late will increase them. So, what is considered full retirement age? The answer depends on when you were born. Over time, the Social Security Administration has had to raise the retirement age to account for the longer life expectancies of retirees. For those born in 1960 or after, the full retirement age is 67. For those born between 1943 and 1955, the full retirement age is 66. The age increases by 2 months every year between 1955 and 1960. So, for someone born in 1956, the full retirement age is 66 years and 2 months. For the birth year 1957, the age is 66 years and 4 months, and so on. Remember that waiting past your full retirement age can increase your Social Security income. Your benefits will increase by 8% each year you delay starting them. Once you reach age 70, your benefits are maxed out. Remember, there is no reason to wait past age 70 to start your benefits. Similarly, starting your benefits before the full retirement age will reduce them. You can begin receiving your benefits as early as age 62, but you will only receive 70% of your primary insurance amount. Now let's talk about Social Security income limits before full retirement age. If you start your Social Security benefits before reaching full retirement age, continuing to work will have the largest effect on how much Social Security pays during this time frame. If you are simply working a part-time job to maintain interaction with other people, then you might not have to worry about the income limit. However, if you have a full-time job, you are likely to run into the limit and have your benefits reduced. Here is how continuing to work before full retirement age will affect your benefits. In 2023, The Social Security income limit is $21,240 if you are under full retirement age for the entire year. For every $2 you earn above this limit, your benefits will be reduced by $1. Let's look at an example. First, we will assume that you are under full retirement age for the entire year. Next, let's assume that you earn $33,240 by working a full-time job all year. Your benefits will be reduced by $1 for every $2 you earn over the limit. So your benefits will be reduced by $6,000 for the year, or $500 each month. Remember that you will not lose those benefits forever. Once you reach full retirement age, your benefit amount will be adjusted to account for the previously withheld benefits. So, you should see an increase in your payment amounts once you hit full retirement age. Speaking of reaching full retirement age, a different limit applies depending on the year that you reach this age. The earnings limit for the year in which you reach full retirement age is $56,520. Likewise, your benefits are reduced by $1 for every $3 you earn above this limit. So, now you know how working before full retirement age affects your benefits, including during the year in which you reach full retirement age. But what happens to your Social Security payments once you finally reach full retirement age? Beginning in the month in which you reach full retirement age, your benefits will no longer be affected by working. There is no limit to the amount you can earn, and there will be no reduction in your benefits. Even if you earn over $100,000, you will still receive your maximum benefit during the year. In addition, the Social Security Administration will recalculate your benefit payment to account for any previously withheld benefits. You will get credit for the months that your benefits were reduced or withheld. You should also know that the Social Security Administration has a special rule for the earnings limit that applies to retirees whose earnings will be over the limit for the year, but who will only receive benefits for part of the year. They will pay full benefits for any whole month during which you are retired, regardless of your annual income. It's also important to note that even though your benefits will no longer be reduced after reaching full retirement age, they might become taxable if your earnings for the year are too high. Now, you may be wondering how the Social Security Administration will know that you earned more than the annual limit. The answer is that you will need to tell them. If you are going to earn more than the earnings limit, you should notify the Social Security Administration right away. This notification will allow them to properly adjust your benefits so that you are getting the correct direct deposit amount each month. Failure to notify the SSA could have adverse consequences. When you file your income taxes the following year, they will be aware that you made more than the limit in the previous year. If you were still receiving full benefits during the previous year, that could spell bad news for your wallet, especially if you didn't pay the proper amount of Social Security taxes. You will likely be forced to repay the excess benefits that you received. In addition, you might even owe some penalties and fees on those excess benefits. If you have any questions about how it might affect your payments in your particular situation, you should consult a licensed advisor in your area or call the Social Security Administration. They can give you advice on the best approach for your personal financial situation. Now let's discuss the earnings limit for disability benefits, SSDI. The answer can get a little complicated, but here are the details. By receiving disability benefits, you have been found unable to perform substantial gainful activity. In essence, this means that you cannot work due to your disability. So, working while receiving a disability benefit is contradictory. However, you can have some income without it affecting your disability insurance payments. In 2023, you can earn up to $1,470 per month without any effect on your disability payments. For people who are blind, the limit increases to $2,460. In addition, the Social Security Administration encourages disability recipients to return to work when possible. To help with this, the SSA allows a trial work period during which benefit recipients may earn unlimited income without any effect on their benefits. The trial work period lasts for 9 months, and the months do not have to be consecutive. Any month in which a person earns more than $1,050 is considered a trial work month. In effect, this allows a person to have 9 months of unlimited income without any effect on their benefits, so they can test their ability to return to work. After the trial work period ends, the person still has an extended period of eligibility. This means that the person will receive SSDI benefits during the months in which they earn less than $1,470, but they will not receive benefits during the months in which they earn more than this amount. There is also a 5-year period during which benefits can be quickly reinstated if the person is again unable to work due to their disability. And finally, what about Supplemental Security Income, SSI? For 2023, individual SSI recipients can earn up to $914 per month, and couples can earn up to $1,371. You can also not own more than $2,000 worth of assets, $3,000 for a couple, like bank accounts, household goods, etc. It's important to keep in mind that the rules surrounding countable income can be complicated. For students receiving SSI, the income exclusion amount is $2,220 per month, up to an annual limit of $8,950. Some states that offer additional payments may have a higher income limit for SSI recipients. Thank you for watching. We hope you found this video informative.